Okay, hello and welcome. My name is Anthony Cheung and I'm the Head of Market Analysis at Amplify Trading in London. And I'm here to welcome you to the latest EXANTE Investor League competition run in combination with Warwick Trading Society and Amplify Trading. And so my job here really is to welcome you to the competition. On this slide here, I can outline a couple of key points of which will define the competition. The benefits you can get from it, what does it entail. I'm going to give you a bit of background over tips and hints that can help you in terms of your performance potentially, and then also we'll go over what the prizes are on offer and so on. I'm also going to have a quick look at my charts and my trading system to just show you the type of thing that I look at. I'm going to explain a couple of different factors as well and how to break down the financial markets by both macro and micro news events and movement and how asset classes react, and in this case what you guys are going to be trading, which is the American stock market. So before I get into all the technical details of the way of which how to trade and why markets move in the way that they do, let me just explain a little bit here about the competition that's being run here for the first time by the Warwick Trading Society. So there is up to 19 universities taking part. So this has never been done before, as far as I'm aware. So it's a very first in terms of it being a student-run competition. So the guys at Warwick doing an excellent job to get this up and running. What's going to happen here is that this is a 2-week competition. There's going to be various different leagues happening. This one's going to start from probably when you're watching this on the 21st of October. It's going to run through to the 1st of November. And obviously you come at this at an incredibly exciting time because we've got Brexit ongoing. I'm actually filming this on Saturday afternoon and I'm watching Parliament as I'm here because as a person in markets, I want to absolutely be on top of what's going on, giving it such a meaningful event for financial markets, not just UK assets. But you've also got things like the head of the European Central Bank, Draghi, is going to finish his term at the end of this month. You've got an interest rate decision from the Federal Reserve on the 30th of October. So you guys are going to have lots of things to get your teeth into in terms of what could move markets going ahead. Couple of other points here. So Amplify Trading is providing the educational part of this. This is what I'm going to do. I'm going to start from the ground up, so hopefully it can be inclusive of everyone, regardless of your existing knowledge of markets. The points here about why this competition is so great is that we are going to be trading, and so by definition, there's going to be lots of performance metrics that we can look at. And so the team at Warwick will be looking at this in terms of comparison to how did you perform against the market, how did you perform against your peer group, and all of this, of course, will be fantastic to put on your CV to show that you're not just studying, you're learning and connecting this kind of theoretical knowledge to the practical implementation, having participated in real markets. You're going to trade global assets live, so live market, but obviously, unfortunately for you guys, no live account just yet, but a simulated one nonetheless. There's going to be prizes with all 3 leagues. Prizes are cash up to £900. However, the winner of these leagues will come, I think the idea is to come to London to the Amplify Trading floor to then have a playoff, and the winner will get a place on our summer internship program in 2020. That course normally would cost about £3,000, so definitely a big prize up for grabs. And we've had lots of students do our internship before, plenty from Warwick who've gone on to secure jobs at a lot of the top tier institutions in various different roles. So without further ado, let's get into this. First off, going into the market side of things, and I'm going to talk about what the traders look at. So factors that influence investors' outlooks for share prices. So just to be clear, we're going to focus on equities because it's going to be American stocks that you're going to be trading. So there's 2 ways we're going to look at this. The first is macro. So we're going to talk macro and micro. On a macro perspective, this is when people are looking at the overall top level. What is the performance of a economy? Now, how do we define that? Well, we can look at interest rates, we can look at forward guidance from a central bank, we can look at the political climate, and these all give us indicators as to how well is the economy performing at that given point in time. So from a first bullet, the performance of the economy. What is the strength of GDP? How is CPI inflation data coming out? How is retail sales performing? What is consumer confidence? What is corporate confidence? So whenever you think about markets, there are these economic data points coming out nearly every single day. And what we look at in markets is we use that information to kind of update our thinking about the current conditions, which will then lead to what is it that central banks will do in future. Now, given the context of the current political environment, where that's pretty much the most singular dominant theme of markets right now, because not just Brexit, you've got Trump in the White House, the protectionist policy, trade wars ongoing with China and other trade partners around the world. You've got populism in mainland Europe. There's lots of other considerations as well to take into account. So this is what we would look at from a macro perspective. This is why for you guys it's going to be absolutely key that you stay on top of the news. You need to be aware of when are these big events happening. So as I just briefly said, when is the interest rate decision happening from the US? That'll be on the 30th of October. When is there any key economic data happening? And when are there any key political deadlines? So the one which we're awaiting right now is going to be whether or not we get to vote, or Parliament votes on the Brexit deal secured by Boris Johnson. Now that could be then, there's a let-win amendment, which could mean that this rolls on into next week before we know the outcome. But if there's a deal or if there's a delay, all of these things will have an implication potentially for UK assets, the pound, the FTSE, but ultimately, let's say if a deal is secured and then risks in the short term are diminished, it could lead to some risk on appetite, which could see equities rise. Now, the way I'm going to quickly jump over to something else that you can stay on top of this on the macro side is that I tweet very frequently, through the weekend, during the day, anything that I think is particularly interesting. My specialism is I focus specifically on the macroeconomics and monetary policy. So things like Brexit, for example, traders will turn to me is to give them ideas about what the potential outcomes and reactions could be. So if you go on my Twitter account, if you are on Twitter, I definitely suggest you do use that as a resource. It's particularly good for obtaining financial news. Point one, if you just follow everyone I'm following, the 259 people, it gives you a nice overview of just general macro discussion from people at banks to big news agencies to people like me working at other firms. So it's very easy to get a curated feed of relevant information. Now, these are things that I would tweet so you have a better understanding, which is, what's the process, if you like, for a deal to get done? What's the existing law? If the government's going to seek an early election, how does that happen? So these are all common things. But one thing in particular that will be very useful for you guys is that by the time you watch this on Sunday, I would have already issued this. So this was this week. And what I do every Sunday is I compile a look ahead for all of the economic data, all the political events, all the central bank events, all the corporate earnings, and I consolidate it into one cohesive one snapshot calendar. So for you guys, given you're trading over a duration of 2 weeks, you're going to get 2 of these. If you just go on my Twitter account, you'll be able to see, and what you should be doing is strategizing, looking at what are the key risk events. So what I do on this calendar is anything that's super important, I will bold and underline. So here you can see there's major Chinese data, trade balance, CPI data, there's UK CPI data on Wednesday, US retail sales, and so on and so on. So I would definitely suggest you use this to give you a feel of where the direction of markets might go fundamentally in the week ahead. The other thing you can do is, if you go onto YouTube, just type in Amplify Trading, subscribe to the channel, and hit the notification icon or the bell icon. And every time we release a new video, you'll be alerted on your mobile phone. Now, the reason why this is particularly useful is on a Monday, you can see here we get well over 1,000 views every week when we do our look ahead. So if I just click on last week's one, this will go out and be available from 9 a.m. Monday morning. Now, what it is a half an hour session where I will go through my view for the week ahead, not just talking about equities, but talking about technical analysis, talking about the fundamentals, and everything in between. So do check that out. That's going to be on Monday for the look ahead, and then we release one every morning. So if you really were keen on getting on top of the markets, this is probably the singular easiest way of doing it, because I'm only talking about what traders are looking at. So rather than you just scouring through the FT newspaper for hours and hours, I can save you a lot of time by just looking at this video, and then I can relate it back to how markets are moving and interpreting that information. So again, Twitter, particularly useful. My handle is just AWM Cheung, or just search my name. My handle actually is on this video feed, you can see below. And then you've got YouTube, just type Amplify Trading. And also, I do use Instagram. If you just search Amplify_ant. So I do post things like stories about the headlines, or if there's breaking news, things like that. So whatever platform is going to be easiest for you. Okay, just going back to the slides then. A few other things to have a look at. So other than the macro, what we can look at is the micro. Now, for any of those studying economics or have done, you'll be fully up to speed with this, but this is when we start looking a little bit more in detail about individual companies, their financial statements. Now, how are they performing? What's their organizational structure? What's their product mix? What are their revenue streams? So for example, someone like Apple, what is their biggest product? We know it's the iPhone, but what percentage of their overall revenues does that make up? What is then, if they're diversifying away from being so one-dimensional, then looking at services or streaming TV, what's been the percentage increase over time? How is that performing? All these different types of things can have a meaningful impact for the price of the share of Apple, for example. Regulational change, and again, sticking with the tech sector, things like the data privacy scandal, that hit all of the technology firms very hard because of the probably pushback that it would have from the regulators to put more onus on data protection. So these types of things can be very important to monitor. And then speculators, people just looking to trade to make quick returns on the back of these stock prices. And then technical levels, which is what we're going to have a look at now. So let me just switch over my charts, and we're going to have a quick look at the S&P 500. So this is the S&P 500. For those who've never heard of that index, the S&P 500 is probably the benchmark of all US indices. The top three you've probably heard of before: the S&P 500, the Dow Jones Industrial Average 30, and then the NASDAQ 100. Now, the S&P 500, the reason why people use that as the benchmark is because it is much more representative of all of the sectors that comprise within a marketplace. So we have technology firms, financials, healthcare, industrials, you name it, they're all in there. What we're looking at here then is the more technical setup of the chart. So here, whenever you're doing your technical analysis, and this goes for even if it's a stock, a company, or it's an index like I'm looking at, it's very important to start big on a time frame and then start to draw down your time frames. So start with the big picture. Otherwise, if you look too small, what it can look like is lots of false price movement without then putting it in context of the bigger movement that's taking place within that specific asset. So here, I'm looking at the last 2 years. You've got the 2018 period here. We had the big sell-off in Q4 for these reasons I've listed. There was trade war tensions. Central banks at that point were tightening their policy, and people were getting nervous about that and how high rates were getting post-financial crisis era. And then we had global growth slowing. We hit that right at the bottom on basically Christmas of last year. It was actually Boxing Day. But then we recovered. The Fed started backing off any interest rate hikes. Chinese authorities started to intervene in tax cuts, regulatory changes, fiscal stimulus, and so on. We had a phenomenal recovery. And here's where we are right now, the ellipse on the right-hand side. So despite all the stuff that you read about all the risks in markets, in fact, we are just off all-time record highs. That's the all-time record high right there that we printed not that long ago in the summer. We retested close to it, you can see, in the middle of September, so only a few weeks ago. Now, interestingly, why this is happening, a lot of it is that the global economy is slowing, but by definition of that, it means that the central bank of the US and other central banks need to readjust their monetary policy to make it more accommodative, lower rates, more QE, these types of instruments to help prop up what is a weakening economy and the pessimistic view about the future growth potential of the world economy. So that's the big picture. What I really want you to do though is start zooming it in. So this is now looking at just September and October's price action. And here I've put a couple of levels on, and let me just talk you through why. This is when you're just using the very simplistic form of support and resistance levels when looking at chart patterns. So here, this is up towards the all-time high territory. So you can see then this is a perfect case of what would be a double top. So the market hits this level at say 30.25. When it comes back to retest it, where do, on this breakup higher in price, people look to come out and book profit on the fact that they've gone long, buying this instrument, they sell, close it at the same technical level of which the market responded to before. So this would be a classic example of a strong level of resistance. You can also see, looking on the same range, areas of which the market previously as well responded very well to downside levels of support. And you can see when that support level is broken, you get a really exaggerated and strong break. And where did the market go to on that break? Right down to the exact period of where that previous low was. So this is how price movement tends to move. People look back in time to the previous patterns in order to ascertain where do they think price might go to. So you can see here again in October when we were recovering, where did we initially get up to when we rallied quite aggressively here? Well, we got right back to where we were before. And then the market came back up. Where did it hit resistance again? Exactly the same level. And then when we came back up, test, and then the second test, we break higher, and vice versa. Now, looking in a slightly more shorter term, you can see we're now forming what we would call a range. And so you've got a range here where the market respected, despite breaking through, these are daily candlesticks. So that means that on that day, the price came back down that low, but actually closed up here. So the range is still whole and it's in play if that was the case. So now going forward, you're kind of looking at this price direction of really the key levels short term are here on the upper bound 30.08 or 3008 in the S&P, or here 29.84 3/4 on the low. So at the moment this would be a range, and one of the basic ways of trading from a technical perspective could be you're buying at the low of the range, banking on the fact that you're going to sell at the high of the range. And then unless something fundamental occurs, like a trade war headline or something like that, then you're going to continue to play that range. So that's just very loose level technical analysis. The Warwick Trading Society have lots of good content on this, so any questions, please direct them to them. Okay, back to the slides. Some other things I want to quickly wrap up on. So here, one thing, given the calendar timing of the year, we are right in the middle of earnings season. So if you're a publicly listed company, you need to report your financial statements and update 4 times a year, every calendar quarter or thereabouts. And so I wanted to just give you a brief overview of what is this. So as I've just discussed, quarterly update of financial performance, where analysts and investors are able to better gauge the underlying health of a company. So its income statement, its balance sheet, its cash flow, what is its guidance for the future, what's its impact from, say, like Boeing, if there's a particular issue that's faced, then certain fines or penalties, how has that affected the bottom line, and so on and so forth. In practice, stock prices see incredibly large fluctuations, more so than normal, on the back of this is the real most detailed granular level insight you get into the metrics of how is a firm performing. So what you're going to see is when you're investing in these single companies, you're going to see big spikes in either direction when there could be an earnings release coming. So it's very important to plan around when are the big companies reporting. What probably would be the more prudent approach is, rather than second guessing it and using a 50-50 toss up by entering a company and buying it thinking it's going to go up just before its earnings, that's a highly risky strategy, because what might happen is the numbers are bad and you're buying the company and then you can lose a lot of money quite quickly. So sometimes it's more about the post movement. Would you want to then look to find a technical relevant point to get into that trade, to go long or short? Or is it a bellwether for the economy or for generally the sector that could lead to opportunities in other related companies? Analyst expectations obviously are particularly important. So these are the sorts of things where you want to be doing your due diligence ahead of the earnings report, reading around on things like seeking alpha, Bloomberg, the FT, what is it from these companies are markets expecting? So that's where you can benchmark then how you think the share price will react. Index traders need to be fully aware then of the largest companies that report, all sentiment related stocks. So you've probably heard of a terminology on perhaps not called the FANG companies. So Facebook, Apple, Amazon, Netflix and Google. These are all kind of tech or growth related names where typically they outperform the market because they're invested in technology which has the potential to open up new avenues of large scale potential revenue streams for these companies. But they're companies that tend to outperform when markets are confident and underperform when markets become less confident. And so even though Netflix might be much smaller than those other companies I mentioned, they are still very important because they carry a degree of sentiment, how the people's perception of risk might play out over those coming days. Netflix did actually come out this week and actually their shares rallied 10% just as a guideline. Jargon buster, just thought I'd put a couple of points about how to interpret an earnings report, and these are just some of the kind of top metrics to be aware of that will define how the share price will normally move. The top one with American companies is earnings per share, the monetary value of earnings per outstanding share of common stock for a company. Sales, which I'm sure you're familiar with, top line, net income, the bottom line, and then EBITDA, a proxy for the company's operating profitability. And then one of the most important is forward guidance. What does the company think about the future? Often, given we have an analyst's expectation for a company's performance, what can be more telling is about, well, how does the company feel about the future? If everyone's very pessimistic and global growth is deteriorating, but a company's profit guidance is quite high, well, that's quite a positive sign that they feel quite confident that they're performing well, that they have enough order flow coming in, that their business is going to continue to perform in increasing profit. Here's a quick look at the earnings coming up, and I know this is quite small, but again, I will cover this on Twitter when I post on a Sunday, so you can grab that and see it in more detail. So a couple of the headline companies to look out for this week and the week after. So this week, really the key names and the biggest companies I'll focus on are Merck, the pharmaceutical company, Amgen, the same kind of company, Pfizer. You've also got Facebook, Apple and General Electric all reporting their numbers on a Wednesday. Facebook and Apple will be after market, so after 9 p.m. on Wednesday evening. You've then got Altria, Pinterest could be quite interesting from a recent IPO that they had. That'll be on Thursday. And then you get the oil majors, Exxon, Mobil and Chevron reporting on Friday. The week after, there's actually not many big companies reporting. You get the likes of CVS Healthcare and Qualcomm on Wednesday. Well, let me just have a look here. No, so just to go back, those companies I just mentioned with Apple, Facebook, Pfizer, just to be clear, that was the week of the 28th. So that's going to be the second week, that you're trading. The first week that you're trading is going to be Halliburton's one of the big companies to look out for on Monday the 21st. McDonald's, Procter & Gamble on the 22nd. You've got Boeing, which is the biggest company in the Dow Jones Industrial Average on Wednesday. AT&T, the telecom service provider on Wednesday. You've got Twitter, 3M, Intel, Visa, Comcast all on Thursday. And then, as I said, the week after is when you get the big guns like Apple, Facebook and Pfizer. So yeah, lots of big companies coming out, which means that earnings season is going to be a main feature of whether or not you're going to be successful in this competition. So stay tuned to things like Twitter and so on to find more information and the morning briefings that we cover on YouTube. Traders checklist, here's just a few things. You should always plan ahead. Look ahead on the Monday before you make any investment decisions. When is it? If you're going to invest in Apple on Monday, or when are their corporate earnings coming out? What are people saying about them? Is it a good time to invest in them? And so on. Are there any large companies reporting? Now, 15% of the S&P 500 is reported so far as of the 18th of October. There's 126 S&P companies due to report the week of the 21st of October. And there's 12 of the 30 Dow components. So almost half of the Dow index is reporting this week. So large companies, as I said, Boeing will be a key one. They represent just under 10% of the entire index, would be one to watch. Are they the first company to report from their sector? Often the market will place greater gravitas if they are. Is the company a bellwether for the economy, i.e. someone like Caterpillar, which operates in, say, machinery and relatable services tied to construction, meaning that their services generally are more in demand when people have greater confidence about economic growth. And so if their numbers are bad, people will translate that as into perception of a weaker economy in the future. So they act as a so-called bellwether in that respect. So bellwethers can be ones to look out for. Sentiment names like Netflix, as I mentioned. As I said about the ones to come, you do have the likes of Pinterest and Twitter. Could be interested to see what investors' appetite is like given the current economic conditions and the recent spat of disappointing IPOs like what we've seen with WeWork recently. Is the company representative of only a small sector? This is probably the one caveat to the rule of monitoring just big companies. Small companies like AMD, which operates in a relatively small sector like chip makers, means that if they report before Intel or ASML, who are much bigger companies, their shares can also move on the back of, say, AMD, because of the fact that if one performs like this and it's a small sector, then probably all the rest are going to be impacted by the similar forces that created that initial weakness. Is there any read across from other companies in the supply chain? So another good way to look at this is if you were looking at someone like Apple and you were thinking about the providers of its components, if they report numbers, how are they faring, given that, say, if Foxconn, the Chinese company, has low sales or low order flow for its chips, well, then it's probably because of weak demand for the iPhone, for example. Make sure you always do your due diligence and prep work. So a combination of fundamental analysis from a macro and micro level, and then also looking at technical levels on the charts. So it's a combination of all these things. Looking at the macro for any big risks that are coming in the period ahead. And then even in the macro environment, if there is going to be, say, a big trade meeting between the US and China, and the risk is that that could result in a breakdown, a more negative implication for the market, well then what are going to be the best companies or sector to invest in under that situation is how you want to think. All right, that is it. So I'm going to leave it at that. I don't want to talk anymore. I want to let you guys get on with the competition. I'm going to wish you all of the best for the period ahead. But remember, if there's anything that you need, feel free to follow, and you can send me any messages on Twitter. But what I would say is probably the best form of contacting me directly, if you needed to, would be on our videos. Say this was on Friday, you can just go to the comment section, leave a comment. You can see lots of people do, and I will try and reply to everyone. So you can use that as a learning resource as well as the competition goes on. Okay guys, thank you very much, good luck, and I'll speak to you again soon.